Fix your credit, buy your dream home, 7 simple steps. Hey everyone, it's Keith Hill, and let's be real for a second. Who hasn't dreamt of owning their own home? It's a huge milestone, right? But getting a mortgage can feel like navigating a financial maze, especially if you're worried about your credit score. A lower score can mean higher interest rates, and trust me, those can cost you thousands over the life of your loan. But listen, don't stress. A less than perfect credit score doesn't mean homeownership is out of reach. You just need to be proactive and strategic about improving it. That's why I'm breaking down 7 super actionable steps you can start taking today to boost your credit score and get you closer to that dream home. We're gonna dive deep into things you can do right now to take control of your credit, understand how it all works, and ultimately, put yourself in the strongest position possible when you're ready to buy. So, if you're serious about making that dream a reality, stick around, hit that subscribe button, and let's get started. Know your starting point. Check your credit report. The first step to fixing your credit is knowing exactly where you stand. It's like checking the map before starting a road trip. You need to know your starting point to plan the best route. Head over to annualcreditreport.com. This is the only website authorized by the federal government for free credit reports. You can get a free report from each of the 3 major credit bureaus, Experian, Equifax, and TransUnion, every 12 months. Don't skip this step. It's crucial to get all 3 because each bureau might have slightly different information about your credit history. Once you have your reports, really take the time to comb through them. Look for any inaccuracies, errors, or things that just don't look right. We're talking incorrect personal information, accounts you don't recognize, or even reporting errors like late payments that were actually made on time. Remember, knowledge is power, and in this case, it's power over your financial future. Having accurate information is the foundation of everything else we're going to do to improve your credit score. Don't let mistakes hold you back. Dispute any errors. Okay, so you've got your credit reports and you've spotted some errors. Now what? This is where you become your own financial advocate. Don't let those mistakes drag down your score. Each of the credit bureaus has a process for disputing errors. You can usually do it online, by mail, or even over the phone. When you file a dispute, be sure to be specific. Clearly identify the error, provide any supporting documentation you have, like payment confirmations or bank statements, and keep records of all communication with the credit bureau. It might feel a little intimidating at first, but trust me, it's worth the effort. The credit bureaus are legally obligated to investigate disputes, and if they find an error, they have to correct it. This can have a significant impact on your credit score, sometimes boosting it almost immediately. Lower your debt, raise your score, pay down balances strategically. Alright, let's talk about debt. It's a fact of life for many of us, but carrying too much of it, especially high-interest credit card debt, can really drag down your score. One of the most important factors in your credit score is something called credit utilization. This is basically how much of your available credit you're actually using. The lower your credit utilization, the better. A good rule of thumb is to keep it below 30%, but ideally even lower is better. So, how do you actually lower it? The most effective way is to pay down your existing balances strategically. Focus on paying down your highest interest credit cards first, while still making minimum payments on all your other debts. This is called the debt avalanche method, and it can save you a ton of money in interest in the long run. Remember, paying down debt isn't just good for your credit score, it's good for your overall financial health. Chapter 4. Avoid temptation. New credit can wait. When you're trying to improve your credit score, it's really tempting to think a new credit card with rewards points or a store discount will help. But trust me, resist that urge. Every time you apply for new credit, whether it's a credit card, a car loan, or even a mortgage, the lender does what's called a hard inquiry on your credit report. These inquiries can actually ding your credit score, especially if you have a lot of them in a short period of time. Lenders see multiple hard inquiries as a sign of potential risk, even if you're just shopping around for the best rates. So, while you're working on boosting your score, try to avoid applying for any new credit unless it's absolutely necessary. Chapter 5. It might seem counterintuitive, but closing old credit card accounts, especially if you don't use them anymore, can actually hurt your credit score. Why? Because the length of your credit history is another important factor that lenders look at. The longer you've had credit accounts open and in good standing, the better it reflects on your credit worthiness. Think of it this way. A long and positive credit history shows lenders that you've been managing credit responsibly for a significant amount of time. So even if you're not using an old credit card, consider keeping it open. Just be sure to make a small purchase on it every few months and pay it off right away to keep the account active. Chapter 6. This one might seem obvious, but it's crucial. Payment history is the single most important factor in your credit score. Even one late payment can have a significant negative impact, and it can stay on your report for up to 7 years. So, how do you make sure you never miss a payment? Set up automatic payments. Most banks and credit card companies allow you to set up automatic payments for at least the minimum amount due. This takes the guesswork out of it and ensures that you're never late. If you prefer to manage your payments manually, set up payment reminders for yourself, either through your bank's app, a calendar alert, or even a good old-fashioned sticky note. Whatever method you choose, the key is to be consistent and proactive about making your payments on time, every time. Chapter 7. Improving your credit score is a marathon, not a sprint. It takes time and consistent effort to see real results. That's why it's crucial to monitor your progress along the way. Regularly check your credit score and report to see how your efforts are paying off. You can access your credit score for free through many credit card companies and personal finance apps. As you track your score, pay attention to the factors that are influencing it the most. This will help you identify areas where you're making progress and areas where you might need to adjust your strategy. Remember, knowledge is power, and the more informed you are about your credit, the better equipped you'll be to achieve your financial goals. So, there you have it. 7 actionable steps you can start taking today to fix your credit and get on the path to owning your dream home. Remember, a good credit score is like a passport to financial freedom. It opens doors to better loan terms, lower interest rates, and ultimately, more financial security. It might take time and effort, but trust me, the rewards are well worth it. The feeling of owning your own place, building equity, and achieving financial stability is an incredible feeling. If you found this video helpful, hit that like button and share it with a friend or family member who might benefit from it. And don't forget to subscribe to my channel for more tips and tricks on personal finance, real estate, and building a solid financial future. Thanks for watching, and happy house hunting.